Hello everyone and welcome back to the channel. For months we have heard talks of the resilient US labor market, a strong economy defying expectations. But a flood of recent data, specifically from October, is painting a very different and frankly alarming picture. We are witnessing what many are calling a layoff tsunami, with US jobs cuts spiking dramatically. The big question is the labor market finally cracking under the pressure? Let's get straight to the numbers because they are stark. US based employers announced a significantly high number of job cuts in October. We are not just talking about minor adjustments, these are substantial, widespread reductions that have economists and workers alike on the edge. According to various reports, including those compiled by the outplaced firms, October saw one of the highest monthly totals for layoffs announcement outside of the major recessionary periods. This isn't just a blip; it's a trend that's raising serious questions about underlying health of the American workers. It forces us to ask, if the economy is so strong, why are so many companies letting people go? While the layoff wave is broad, two sectors have disproportionately affected: technology and warehousing. And therefore, let's break it down. First, tech. For years, the tech industries was darling of the job market, characterized by rapid growth, lavish perks, and seemingly endless hiring. But that era has definitely ended. After a hiring spree fueled by pandemic driven demand and cheap capital, many tech companies are now making a course correction. We are seeing giants like Google, Meta, Amazon, and countless startup implement multiple rounds of layoff. This isn't just about efficiency, it's about a shift in economic priorities. Higher interest rates makes borrowing more expensive, hitting growth focused tech companies particularly hard. Advertisers are pulling back, venture capital funding are tightening, and the pressure from shareholder for profitability and not just growth is also intensified. So what we are seeing in tech is a correction, but a painful one of the thousands of employee. This is a open fact because many people are getting laid off. Next, warehousing and logistics. This sector exploded during the pandemic as e-commerce became the default. Companies rushed to build out massive fulfillment centers and hire staff to handle the unprecedented volume of online orders. But consumer spending patterns are changing. As people return to in person shopping and shift spending from goods to services, the demand for warehousing space and staff has softened significantly. We are seeing major players in retail and logistics streamline operations, close facilities, and reduce their workforce. This point to a broader slowdown in a goods consumption, a critical indicator for the health of the economy. These aren't low skilled jobs either. Many involves complex logistics and technology, representing a substantial portion of the blue collar workforce. So while tech and warehousing are the most visible casualty, are these isolated incidents or symptoms of a deeper problem in the overall US labor market? The evidence suggests that it is. Beyond direct layoff, we are seeing another concerning signals. Hiring freezes are becoming more common across various industries. Companies aren't just letting people go; they are also slowing down on stopping, new hiring, joining them altogether. This reduces opportunities for the job seekers and makes it harder for those who have been laid off to find new employment quickly. We are also observing a cooling in wage growth. While still positive, the pace of wage increase is moderating. This is good news for Federal Reserve battling inflation. But It also indicates less competition for workers and less bargaining power for employees. Furthermore, the duration of the employment might start to creep up. When the market is truly hot, laid off workers can find new jobs within weeks. If that period extends, it puts significant financial strain on individuals and families, impacting overall consumer spending, which is a massive driver of the US economy. This brings us to our central question. Is the US labor market cracking? And if so, what does that mean for the likelihood of a global recession? Historically, a significant downturn in labor market marked by sustained job losses and rising unemployment is a precursor to a recession. The Federal Reserve has been aggressively raising interest rate to combat inflation, and these rate hikes are designed to cool the economy, including the job market. The concern is that they might be overshooting, pushing the economy into a contraction. While the official unemployment rate has remained relatively low, many economists argue that the layoff announcements are leading indicator. They suggest that companies often announce cuts before the official unemployment statistics catch up. So these October numbers could be the early tremor before a bigger earthquake. The Fed wants soft landing, bringing inflation down without causing a recession. But balancing that act is incredibly difficult, and the rising tide of layoffs suggests that landing might be bumpier than anticipated or even hard one. So what does this layoff tsunami mean for you, whether you are employed, looking for a job, or simply concerned about the economic outlook? Firstly, for current employees, this is a crucial time to demonstrate value within your role. Focus on impact, efficiency, adaptability. Consider upskilling or reskilling in the areas that are still in demand, or those that make your current role indispensable. If your company is showing signs of distress, it is wise to discreetly update your resume and professional network. Now, secondly, for job seekers, the market is becoming more competitive. Tailor your applications meticulously, network relentlessly, and be prepared for longer job search timelines. Flexibility regarding roles, industry, or even compensation might be necessary in the short term. Don't get discouraged, but be strategic. Thirdly, for consumers, be mindful of your spending and savings. An uncertain job market means prioritizing financial resilience. Build or bolster your emergency fund. Reduce unnecessary debt. These are the prudent steps regardless of the economic climate, but especially important now. While the current landscape presents challenge, it is important to remember that economic cycles are just cycles. Downturn eventually give way to recovery. However, ignoring the current signals would be a mistake. The coming month will be critical in determining whether October job cuts were an isolated, severe correction or beginning of more prolonged period of labor market weakness. We will be watching key indicators like unemployment rates, GDP growth, and consumer confidence very closely. The goal of this discussion isn't to create panic, but to equip you with the knowledge to understand what's happening in the economy and to make informed decision for your own financials and career future. Awareness is the first step towards resilience. So friends, what are your thoughts on these layoff announcements? Have you or someone you know have been affected? Share your experience and insight in the comments below. And if you found this video helpful, please like and share and subscribe for more in-depth analysis of the economy and the job market. Thank you for joining live. Thank you for watching. Stay informed, and I will catch you in the next one.